The dollar versus Canada is coming off modestly after the GDP data came in a little bit actually stronger than expected in Canada, and the US PCE data was as expected. Let's talk about the technicals that are driving this currency pair. So let's get started. Canada GDP a little bit stronger for the month of July, and the US PCE data, as expected, has sent the dollar versus Canada a little bit to the downside off of its high price. Yet, recall from yesterday, we did move sharply to the upside, and in the process, we extended above this 38.2% retracement of the move down from the March high to the low price that we saw in the month of June, I guess. And that 38.2 was stalled the rally a few weeks ago, and in the month of August at the 1.39235 level. The subsequent move to the downside saw the price extend toward this low price right here, and then in trading last week, it came back down to the trend line and toward these low prices right through here. It was a nice little neckline that could have been broken, leading to a sharp move to the downside. Instead, we found buyers, and the buyers have taken the price sharply to the upside and back above that 38.2% retracement. Now, this 38.2% retracement is now going to be a key support for the traders, at least in the short term, for the pair. We, after finding resistance against it, now breaking above it, it makes sense to use that level as a support at 1.39235. Stay above it is more bullish, and move below it, and we could expect a further downside probing. Why? Because of the disappointment of the failed break. The next targets come against this swing area down through here, and then toward the high price, I should say, going back to this week, back in July at 1.38785. So those would be the targets on a further move below, or a move back below 38.2% retracement. Absent that, and despite the little dip that we're seeing in trading here today, the bias remains more to the upside, at least in the short term. What looms ahead is the 200-day moving average at 1.39729. We need to get above that level in order to push the price higher from a technical perspective. The last time the price was above the 200-day moving average, you have to go all the way back to this period back in, I guess that's early April for the pair, when we finally broke below that level with momentum to the downside. We tried it right here, but couldn't do that. So the sharp rebound. So getting back above the 200-day moving average at the 1.39729 would be more bullish for the dollar versus Canada. So a little corrective movement in after the gains yesterday in this currency pair. We'll see if support holds. If it does, 200-day moving average would be where we're targeting. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.